So glad Ben Emons is with us, CIO, founder of FedWatch Advisors, joining me today so we can make sense of a lot of things going on. I have a lot of questions, so keep the answers concise, Ben Emons. Let's start with because I really have a lot that I want to discuss. Let's talk about your market feeling. What's your market feeling right now?
So I started the day looking at gold, Bitcoin, and the Nasdaq, and I noted that each of them had a top one after the other. First Bitcoin, then gold, and then the Nasdaq. And then we kind of see that we're seeing these bounces currently without Bitcoin actually following through. So I feel this is a very fragile situation currently, Nicole. And yesterday's sudden sell-off that came out of nowhere, and it's still unexplained exactly why that is, just gives you the sense that I think people are looking for any kind of rebound currently to take some profit and then sit on the sidelines, opposed to this optimism that we had weeks before of everybody gung ho on AI. I think that seems to be really changed right now.
Okay. What did you think about Tom Lee's comment that maybe there was a software bug in one of the exchanges, and that may have expedited or, sort of accentuated the selling that we saw in Bitcoin? And he saw Ethereum and said it'll all wash out when we get to 77,000 on Bitcoin. What did you think about that theory? Do you know anything about it? Does it make sense?
It seems a bit strange because I know that sometimes in the crypto space, particularly, that you have certain exchanges where the liquidity can evaporate, maybe for reasons as Tom explains. And he said actually in an interview that it was within the exchange itself, so not even outside of the exchange, of other platforms being quoted this particular stable coin, but that one stable coin can have a ripple effect to the entire market. That is obviously telling. I think that I would think is something to be mindful of. That seems to be that we had very big positions, levered positions, that are suddenly unwound because of one particular technical factor. So that again underscores, I think, this vulnerability of this market that's come to the surface. So whether it's actually happened exactly what Tom describes, and he's an expert on it, so I probably think he's right. But I look at the ripple effect. I think, well, that's something to really keep in mind here. From here, we have to indeed see more washout of leveraged positions to feel more comfortable where we're heading from here.
We heard from Williams today, who said there's room for a near-term rate cut. I mean, Hammock has been sort of on the fence, not really big on the rate cuts, but the big ones are Myron and Waller and Bowman. If we hear, and the likelihood of the rate cut went up exponentially in the last 24 hours from 27% to 70% for December. If we get some clarity that we really are going to get a rate cut in December, do you think that just gives the market the boost it needs? Maybe the market just takes off from here to that date?
It was notable how markets reacted today to that particular news, a bit of a relief, because I think it has been bugging markets too, of this hawkish language that started somewhere after the press conference with Powell, and went on with one Fed member after the other sort of coming out saying, well, probably we don't have to cut rates next time and all that sort of language. That one comment by Williams today, as in really the two words near term, that near term we could maybe cut again, just suddenly shifts the sentiment. So I'm not sure if this rate cut is actually really on the table so firmly that the futures market is just as skittish as the Bitcoin market is. Like there's not much liquidity there, and it just suddenly flips the probability, but it gives the stock market a reason to say, here's a relief, let's rally. I would be a little cautious here because the comments that are coming out of most of the voters is really about we don't need to cut right now, given that the inflation picture isn't exactly cooperating the way we would like to. And I think that's something for investors to keep in mind.
The dollar may close at a 6-month high. We know that Japan has put in stimulus. The cabinet approved $135 billion in economic stimulus. What happens to that yen carry trade that crushed us once? Is that still out there?
Yeah, that's very much out there. That's a very large trade that back then in August of 2024 was maybe to an extent unwound, but it put right back on later, when we went into the fall of that year and even this year. So the yen being weaker means also the carry trade again becomes larger because people are borrowing yen. And they're selling yen as a result. So the intervention seems to be maybe potentially looming here. A lot of rhetoric out of Japan, and they're watching how much the yen is changing on the month, and we're about now 7 yen change. It needs to be about 10 yen change to see the actual intervention happen. But if it does happen, then I think there could be somewhat reversal of yen strength. That would affect the carry trade, so to speak. But I think the markets is a little decoupled here in terms of yields, because normally when you get like yields in Japan going up, treasury yields go up here too, and that hasn't happened. So I think that it's being looked at more like this is a Japanese domestic situation, but the carry trade is very large. So if they do intervene, I think they will affect the carry trade significantly.
Yeah, and that hit tech stocks pretty hard last time. Um,
Yes.
Okay, I have multiple questions, but I'm going in order because one thing I haven't talked a lot about is Venezuela and the U.S. positions that have been sort of noted for military buildup around Venezuela on the way to Venezuela. And I just saw on Bloomberg, U.S. warships actually cut off the path of a Russian tanker that was headed to Venezuela. Do we have something really brewing here? Are you worried about this? And what does that mean for an investor?
Yeah, that's another macro factor that's sort of in the background that suddenly can come to the forefront if it becomes really like a tense situation. Because that example you mentioned, that is some geopolitical tension right there, right? If military aircraft, just cut off this tanker, this Russian tanker, that's obviously irks Russia, obviously, because they're trying to sell their oil to Venezuela. And this is really an issue that I think that could potentially upend a bit the oil market, so to speak, because what Trump is trying to do, President Trump, is to really try to eliminate the oil sales to other countries. But Russia has a lot of barrels, so if it could really take it off the market, it could lift oil prices sharply. So here too, something that's hanging in the background doesn't really play markets really right now, but that's something to monitor. So yes, that would be of my worry.
The Bitcoin trade here, how low does it need to go here as the VIX has also surged? I mean, we saw the VIX this week up 30% at one point. There's definitely some nervousness in the market. And just when people were saying, I want to get into Bitcoin, gee, I really missed it. And if they were chasing it and they got so excited at 120 and 125, the regular investor got squashed. That's for sure. And institutions are selling off their positions there. Are they just building up cash or are they not believing in Bitcoin anymore?
I think it's more cash building perhaps, but it certainly looks like a falling knife really sharply now. So actually on that basis, it's sort of like if you want to have an opportunity, it is actually here. But it's sold off so sharply that it's also very oversold on any of these technical indicators that at some point this will bounce. So that no matter what the news will be around Bitcoin, that seems to be also overextended. Just like we rallied really hard on the AI trade and tech stocks, that look also overextended. So the market in this case is, I think, gotten to a point where perhaps some level is to be found here, or you just buy it and catch the knife and kind of see like, well, there's a big difference by 80,000 versus 125,000, with a future view that Bitcoin will continue to play a big role in the ecosystem. Now, one story that everybody's been watching, I think, is this encryption, meaning the use of Bitcoin could be limited because of stable coins and because of AI. Still to be seen. Bitcoin remains, I think, the bellwether, the benchmark in the crypto space. So it looks to me like a very oversold opportunity here for investors that have not bought Bitcoin.
That is the one thing that you said go for because the other stuff you were more cautious on. Ben Emons, it's great to see you. CIO, founder, FedWatch Advisors. Ben, thank you. That was a lot. We covered a lot of great stuff.